Hello, everyone. I hope that I'm coming through here, and we're looking for Stefan, Mr. Crux. If he could please make himself present so I can bring him up. And of course, Arash. Welcome, kind. Testing. Can you test your mic there, Arash, for me?
Yeah, can you guys hear me?
Yes.
I'm on VPN, so it might be slow just because VPN is required for Glitch Financial for me.
We're just going to wait for Stefan to come on to the stage here.
Paul and Thomas should also be joining. So they're joining in the next minute, so they'll be on too. Thomas,
Great.
Paul, can you
Are
guys
they in
raise your
the crowd
hands?
right now?
Yeah, Thomas is
Yeah,
on.
that
I don't see Paul yet.
Right. Okay, the hand is raised. There we are.
Hey, what's going on, folks?
Hey, Thomas.
We're just getting Paul in here next. Get moving.
No, take your time. There should be a wild Crux appearing at some point, but he is not here yet.
Hey, Paul, just go ahead and raise your hand at the bottom of the screen. There's a option to raise your hand to join the stage. There we go. Cool. Paul just raised his hand.
Great. Okay, we have Paul We have Thomas, we have Arash. We're missing a Stefan, but we'll start without him.
Stefan.
Arash, so I think it's worthwhile taking us back to 2023, before people could even make subnets. And you reached out to me on because I'd mentioned just sort of randomly that it was going to be possible to make subnets in the future, similar to how I mentioned that we were going to do subnets recently, and there's no timeline or anything. And you reached out to me. Do you remember that conversation? You said like, I'm going to start making a subnet, and it was like 2 or 3 months before.
Yeah, that was awesome. That was a great time. Yeah, no idea what to expect. I didn't even know you were the co-founder of BitTensor, to be honest, because I think it just said core dev. So I was like, I don't even know who I'm talking to. Yeah, it was awesome. You just were like, yeah, you're gonna be able to launch this. Here's how you launch testnet, and it was wild. Just getting started, trying to build, and it was very fun.
And look where we are now. I honestly think that there's no subnet on BitTensor which has been through as a tumultuous time as PTN. Like the ups, the downs, the sideways, the lefts, the rights, the FUD, the FOMO, and we're going to go through all of that on this novelty search, Arash. But serious testament to your character for everything you and your team have gone through and are still staying strong. So, it's a pleasure to have you up on the stage. I have my co-host this time, Mr. Crux. Please announce yourself to the world and test your mic.
Good evening. Can you hear me?
Yes, we can.
Stefan!
Hello, what's up?
So I thought that I would bring the sultry and very good-looking Stefan up to the stage with his camera turned off for this novelty search and possibly one in the future. So anyways, without further ado, let's take it away.
Cool. Thomas, so just heads up kind of how we're going to walk through this. So we've prepared some slides. We have some demos. And so, yeah, really going to be concentrated on full story here. So everyone kind of just understands what have we been working on? What have we been building? So I hear a bit of an echo.
Can you guys see my screen?
Yes.
We can.
I'm not sure if an echo is going to be a problem, though. I can hear myself.
Thomas, that might be your side.
Yeah, I think it might be Thomas's mic.
Thomas, you have headphones? It might help.
Yeah, let me put headphones
on. Yeah, so I think kind of the flow of what we're looking to do for the call is we're going to walk through just some background on what we're building and why we're building it. We're going to talk about incentive mechanism design. We're going to talk about the output. We're going to how do we scale this? Right? How do we make this even more valuable going forward? Some thoughts on how we do that and who we're trying to get involved and the interest we're seeing and the people we're talking to. I kind of want to be able to cover all those things. So pretty excited to present. I know Thomas and Paul are as well. So kind of get going. It's still hearing an echo, Thomas. I'm not sure why.
Brutal. Hang on.
I just pressed the mute button on Thomas.
Let's just not have me talk. Thomas, if you talk, will there be an echo?
Yeah, how about this? Is this all right?
You don't have an echo, but when I talk when you're presenting, I have an echo.
Arash, are you speaking inside of a cathedral?
No, but I think you are. Because I can hear your echo too. Is it, maybe it's my computer. Are you guys hearing an echo?
Everyone is, yes.
Should we just try and roll with it? I don't know. Thomas can try to present and no one talks.
All right. Well, I can give it a go. I can also join on my phone if it's an issue. All right, let's get it kicked off and then just see how it goes.
Yeah, I kind of already gave an intro. Oh, man, those echoes can be annoying though. You know what? 1 second. Let me try to present Thomas and see if we have the same issue.
Sorry, folks, technical difficulties.
Can you guys see my screen? Everything's good. Is there any echo? Can someone try and talk?
You sound good
None
to
at
me.
all.
No echo.
Okay. All right. Well, I'll just present. Just tell me next slide. All right. Can you guys see everything? Everything good? Is it full screen?
It's beautiful.
All right. Let's do this. All right. So first off, thank you so much for inviting us to be able to come present. We've been building in the background, just some background Taoshi, as Jake mentioned, we've been building, I think we launched our summit in November of 23, and we've had a lot of pivots since then. Originally launched as a prediction subnet, and we switched to the minute that, I got news that there was going to be an idea of DTAO, we tried to create the strongest commodity possible. And to us, that was PTN. We thought that would be the most valuable output. And so I had conversation with Jake, super excited about building this thing. And we've had a lot since then, right? We have 18 full-time employees at Taoshi. We also have contractors on top of that. So we are we are shooting for the moon here. We want to build this to be the biggest and best thing to bring the most value to BitTensor. And so that's a little bit of a background on us. Again, as I said, the whole point of this presentation will be to walk through what are we building, why are we building it, the incentive mechanism design, the output, the value of the output, how are we presenting this to the world, what is our vision, right, for this overall, and how does it all work together? And so
Business for prop trading firms running systematic is when a firm there are a huge range of different types of strategies that are employed. And they're often highly secretive about their trading strategies and technology, and they typically employ pretty sophisticated risk management techniques. So at the end of the day, what the value added or the value proposition is that for the partners of prop trading firms, they're adding risk-adjusted rewards that are essentially uncorrelated with other assets or other asset classes like equities or oil or commodities or Bitcoin. And they're doing it in a repeatable way, so that it's a consistent source of cash flow to them. And they do this traditionally by outsourcing to traders. In our case, these are miners. And the traders participate in these risk-adjusted rewards. And that's the way the firms operate. So they risk their own capital. They look for uncorrelated sources of excess return, and they do this in a very calculated, well risk-managed style. And that is the quick intro to prop trading. Thomas?
Awesome, Paul. Thank you so much. For those of you who I haven't met, my name is Thomas. I did my PhD at Stanford before joining Taoshi. Now I'm leading our R&D team as director of R&D. Essentially, my topic before was a lot in computer vision, but I also worked in time series and energy markets.
Thomas, you're muted.
Essentially,
Is that my fault? I can unmute you.
hello, everybody.
I can hear him.
I could hear him fine. That was just you, Stefan, that muted him.
Sorry,
Cool.
Tom. I'll shut
Awesome.
up.
Thanks, Stefan. Appreciate you. No, I'm kidding. Awesome. Okay. Well, today I want to give you guys an intro into kind of what we've been building from a kind of higher level architectural overview. I think a lot of people are familiar with our subnet 8, but what may not be as familiar with is essentially the infrastructure supporting our subnet and actually delivering a product on top of our subnet. So there's kind of 3 major pillars to that. The first one, of course, is our subnet itself, where our miners are actually submitting signals, we're distilling them, ranking them, paying them out. The second one is essentially our network model flow, where we're taking our miners and combining their signals in real time, and then distributing the outputs of that as a single unified product. And the third one is, of course, Glitch Financial. If you follow our socials, you'll essentially know that this is a product offering that we're allowing users to create accounts with and then subscribe to the strategies that are curated on top of our network models. So this is essentially the overarching flow that we've been creating at Taoshi, and I'm pretty excited to kind of go into some of them in a bit more detail and kind of give you a nuanced perspective on how they relate to each other. So of course, the first one is our subnet. Essentially, our subnet is really just looking at interactions from our miners. So I don't know, can you give me the next slide, Arash? Cool. So if our task is, for example, predicting the price of Bitcoin into the future, and we want our miners to essentially resemble traders, what we essentially do is we partition time at a certain point, and then we ask the traders to actually predict into the future. So if you can tab through, you'll actually get a small visualization, a little game of how the miners are essentially operating. We take a single point in time. A miner A or alpha maybe makes a prediction at that point in time. They can either choose a long position or a short position, where the size of that position can actually be selected by the miner in the form of leverage. Essentially, leverage indicates the strength of the belief on the position, where the leverage can be manipulated. Essentially, more orders coming in to lower or increase leverage over time. So in this case, we might have miner alpha submitting a long position on Bitcoin, and miner beta might be submitting a short position. Right? And essentially, PTN can maintain these positions across all of our miners simultaneously, such that miner alpha can have one position that's in a different direction from miner beta, and we can have positions actually on all of our assets at a single given moment. So right now, PTN is managing about 2,500 predictions per month, split pretty evenly between assets. But essentially, what we do is we take that prediction, we take this position from the miner, we maintain that until the miner then closes the position on that position. So we take that into daily returns, and the daily returns are actually what are used to evaluate the quality of the miner over time. Essentially, is an input into all of these risk-adjusted returns that Paul will tell you about in a minute. Paul?
Push to talk, Paul.
We lost Paul.
This is a good run, folks.
Well,
Hello? Hello?
I mean, I'm sure we can all
Do you want
answer
to
this
just run through this,
question.
Thomas?
Sure. So essentially, risk-adjusted returns are looking at the return on top of a position or the daily returns relative to the risk exposure from the positions. So there's a variety of different metrics that we may look at. There's a number of classical indicators. We choose Sharpe ratio, Sortino ratio, Omega ratio. We also look at a T statistic, so the statistical significance of the miner over time. So these are evaluated over a period of 90 days. We need a demonstrated historical performance from each of our miners. Now, of course, you may ask why risk-adjusted returns. Essentially, when we're looking to grow the amount of capital that we're eventually going to deploy, we need to maintain a level of balance between risk and return, essentially, as we do that. So our miners aren't tasked with just infinitely increasing the size of the portfolio. It's a careful balance, essentially. Of course, prop trading groups may use just a Sharpe ratio. We use a combination of indicators to essentially look at the characteristic of our miners in trading. But this is pretty unique in a distributed sense due to the fact that there's a number of challenges that we may see that traditional prop trading groups don't. Now, that's kind of a double-edged sword. A lot of this is beneficial. For an example, as a miner, I could register a number of strategies. That's fantastic if I want to test different ideas in crypto and then one for FX. In prop trading groups, you're typically isolated or siloed into a single domain. So we give our miners more opportunity to test new ideas and grow in new ways. It also poses unique challenges. Another one is a limit on the number of miners. Traditional prop trading can go thousands of miners in their field. The benefit of this is that regardless of your background, depending on your performance, if you're a performance strategy, you have the opportunity to succeed and grow your prominence in our network. So again, a double-edged sword, but it is a unique challenge.
Sorry about that.
Are you there? Okay, cool. All right, I was going to say, do you have anything you want to add? Yeah, we can hear you.
Yeah, sorry about that. Yeah, thank you for that, Thomas. So I just wanted to sort of focus on why risk-adjusted rewards, right? Returns, we all care about our investment portfolios, right? We enjoy it when they go up as much as possible, but this always depends on the amount of tolerable risk, right? So high returns could be due to poor luck or good luck or unsustainable, while risk-adjusted measurements reflect skill and often are associated with more capacity and perhaps, but most importantly, are more predictive of future performance. And this reveals really a deeper statistical truth, really the separation of signal from noise. It's the foundational concept in statistical inference, and lots of ML and AI depend on this. And it's how reliable it measures how reliable your measurements are. And you'll note, like in our 5 measurements, like the well-known Sharpe ratio. If you think about the Sharpe ratio, and you just take away the risk-free rate from the Sharpe ratio, it's essentially like a t-stat from statistics, right? So it's a signal to noise ratio. So that's why it's so important, and that's why prop firms, including ourselves, measure performance based on risk-adjusted measurements. And there are many ways to do this. So we use 5 different measurements. We use a weighted average across all these measurements simply because each of them measure they're all correlated, some are highly correlated, but they all measure different aspects of risk. And if and when new measurements do develop, we will include those in our weighted average. So that's why we use risk-adjusted measurements. Maybe Thomas wants to talk about the unique challenges as a distributed system.
I think we're good to move to the network model, which we're really excited about, and we want to tell you because I don't think we've been building a lot under the hood. but we actually have a demo we want to show you as well. So if you want to touch on the diversification and the utility of miners, Paul.
Yeah, sure. So you know, as much of the fact that our incentive mechanism focuses on maximizing return per unit of risk at the miner level, that does not necessarily mean that that's true at the portfolio level, right? So we could have all miners maximizing return per unit of risk, but at the portfolio level, we need to do this as well. And so uniqueness of different miners is also important. And so we've developed a lot of tools and technology on our end to enable us to do this. So Thomas built a backtester for us to backtest portfolios of miners. We've added different types of optimizers to help us in this endeavor. And we're in the process of adding risk models and alpha models, all to help us do this in conjunction with the backtester.
So kind of one of the unique challenges, again, double-edged sword, but pretty incredible opportunity, is the fact that we have this rotating door of quality coming in from our miners. So essentially, at any given moment, somebody who starts today could be at the top of our rankings in 6 months from now. And we need to essentially have a dynamic network model construction such that it can respond to new talent as it's arriving and as it's getting incorporated into our structure. So I'm going to talk a little bit about how we actually imagine the network model and how we've actually been able to build around this. I think in the next slide. Okay, do you mind if I share my screen here?
Yeah, let's switch to you, and then nobody talk except Thomas, so we don't get a massive echo. Go ahead and share, Thomas, and we'll come back.
Okay, so this is one of the models that Paul has actually been working on in the background. Now, I want you guys to all know this is back tested on top of our miners.
We're still seeing your Discord. So I think you just switch the screen.
Yeah. Did you want to pick the right screen there, Thomas?
Thanks, guys. Yay? Nay?
No, it's still on your Discord. Do you want to send me the link, Thomas?
Yay?
Yes, there we go. All right, good.
Okay. All right. So again, back tested on top of our miners, but essentially what we're doing, and Paul, you can go dive into this a little bit more if you'd like, but we're essentially looking at different ways to optimize the daily returns on top of our miners. The benefit of having a custom backtesting engine is that we can blend different types of exposures that we would like to see on the products that we're actually releasing. So in this case, this is one of the crypto-specific models that, again, Paul has been working on. And of course, we can see the longitudinal historical performance of it. But we can also see how it's actually being composed of miners in real time. So essentially, if I pan through this, you can actually see the composition of different miners, and essentially the weight that they're taking on as they open a position. So I can read you through a line of this, for example. At this moment, we have this miner who's taking about a 6% composition on our network. And essentially what that means is that 6% of the output of our network at that moment is because of the fact that this miner is participating. So if this miner opens a Bitcoin position, we'll take that into consideration with or with a 6% contribution, essentially. And you can see the positions as they're open or evolving over time on the bottom here. So you can see, for example, how we're considering ETH or Bitcoin over time. So this is kind of like an under the hood perspective on what our network model and backtesting engine actually looks like. And Arash will talk about this later, but we actually plan to make a lot of this open source so that people can actually come and build models on top of our miners as part of this competition that we want to grow.
Awesome.
Yeah, I'm if you want to share again, I'm good.
Yeah, I'm going to pick up here. 1 second. Right. We're popping open Glitch Financial. All right, so the next thing we want to show is what does this look like for the end user, right? We just talked about the network model, but what does it look like for someone that wants to use that model? And so really our goal, right, when we think of the ethos of BitTensor, it's democratizing access. It's opening this up so people can get access as a validator to the data. And for us, we want to take that same ethos when it came to who can use the data and trying to unlock this sophisticated product for the world. And so when we think about Glitch Financial, really what we're trying to build is like an open hedge fund. We want to give as many people access to the outputs of the network as possible. Whether you want to start with a smaller amount of funds and scale up, or if you're a larger player and you want to get started, both are optional. And so we've already rolled out our beta, and I can walk you through some stuff here of how Glitch Financial actually looks internally. And we've obviously been building this, and kind of the first time we're actually showing it to a broader audience. So very excited to walk through this. So when we come here, the left bar, there's a few different options. There's overview, which is kind of account overview. It shows all your potential accounts that you have across, crypto, FX, future markets, etc. So you essentially can see them all in one place and all your returns. So if you split your funds across many exchanges or brokers, you'll actually be able to see it consolidated in one view here. The account manager tab is really for our wealth managers that we're onboarding. So we're in talks with a few, but again, we are scaling appropriately on our end. So this is all will take time to play out, but we have interested parties who essentially want to be able to manage accounts in a non-custodial way. So their clients would come in, create accounts, and they would manage exposure across various strategies all in one place within Glitch Financial. The strategies tab are where you can manage your personal strategies. So if you're not an account manager, this tab wouldn't be available, but the strategies tab would be available. And in there, you can choose to add new strategies. You can connect to other brokers or exchanges with your strategies. So a lot of different options there I'll go into. History is just your history of trades. Notifications are notifications in real time on trades that occur, whether they're picked up, fail, you'll be able to receive notifications to fix problems. Settings, obviously your personal information, and then documentation, which we have a whole help desk that's been built out with automated bots to help respond to your needs. So all of this is live. This is in production. You can see app.glitch.financial. This is prod. Now on the dashboard side, notifications in the top right corner. You can go to dark mode, light mode, nice and friendly on a UI side if people don't like light mode. I prefer light mode. And then here you can see the windows, time windows of data. I'm just looking at the last 24 hours. This is one of our testing accounts. So right now we're working on our beta FX models. Right now we have a crypto model out. We're working on, Paul just completed our beta crypto model, a new update to it. And now we're currently testing out our FX models. So this account is just one of our accounts that's for testing FX. This is real funds, like that's real money on a live account. This is the real account change on it. Account aggressiveness is essentially how aggressive you want to be in terms of essentially like leverage usage. So if you want to be more aggressive in terms of returns and drawdown, you have a scale you can choose from to increase or decrease that. Open orders, obviously how many open orders you have, closed orders, number of closed orders that have occurred over the last window right here in 24 hours. So if I go over here to open orders, clearly nothing. And then you can see full trade history here. Again, these are actual trades that occurred and that you can review if you'd like. If I come over here to strategies, you can go ahead and add a strategy. So let's go ahead and just quickly click in there. So there's a variety here that we've been working on, some behind the hood, some that are from validator program that we'll talk about that are being added. And so if you click in here and say you want to choose the network model alpha, you can go ahead and review information in here. And then you can go ahead and say select accounts. And these are the exchanges that we currently have available that you can pick from. WooX, Bybit, Hyperliquid, DYDX, Binance. All of these are available. And we'll continue to add more exchanges you can choose from. So again, Glitch Financial is completely non-custodial. You are connecting your account, you are handling your funds. We do not have access to those funds. So this is a complete SaaS product. If you don't know what SaaS is, software as a service. So you can choose from here, you can add the account, you can choose your setup. Essentially just from here, you just click pay, and then you configure it by putting in your credentials. And if you ever need help, you can always come over here to the Glitch Help Center. We have a full help center built out where you can submit requests, review information to help you get started, and also contact our CS team in Discord. We have an entire Discord server dedicated to our user base. So let's go back to strategies. And in here, I can go ahead and edit my account. And when I edit my account, I can choose my trading settings. So, when it comes to FX, there's a higher minimum of 15K that we have as a setting. And users during beta cannot play with $1 million. There are constraints. So I have a super account, so I can kind of change capacity increases on our network, the amount of funds that we can take on and the strategies can take on will increase. So I have a trade setting of 50K, but again, during beta, this is a limited of values. So you'll be able to put that in there. You'll be able to choose your order fill aggressiveness. So this is to ensure that your orders fill, right? So, if you want to make sure that you're not sitting in a limit order, you can choose if you want to be conservative, moderate, or aggressive to ensure those orders fill, and you can pay a premium if you'd like for those fills. Over time, I imagine that this gets less aggressive due to latency improvements, which we'll also talk about. Aggressiveness multiplier. So that's what I was talking about in terms of, the higher this value is, the more returns or drawdown you would see. It's just a multiplier on the size of your positions. Scroll down here, you can see this is live. The trade pairs that are enabled for trading in the FX markets. So that is everything here. Yeah, that's a full overview of Glitch Financial, and I'm happy to answer questions at the end as well.
Can I ask some questions now, Arash?
Yeah, let's do it.
Okay, so just so I understand, this is connected to Subnet 8.
That's correct. All the strategies, all the data that's being shown here is directly from the network.
And so it's non-custodial, which means I can load some Bitcoin into my account, and the strategies that are running on Subnet 8 plus your network model will be trading my funds in a non-custody way. How does that work?
Yeah, so you put in essentially your credentials. Like, say, for example, you had a Bybit account or a Hyperliquid account. You would pass us your credentials to be able to execute orders, but not have access to your funds. So there's essentially role-based access controls on keys or on accounts that exists on MetaTrader 5, Binance, Bybit, all the major exchanges to make sure that we cannot touch funds. It's only for order execution purposes. So you would just pass that in, you just put it in directly into the app, and it connects, and it can execute trades on whatever funds that you dedicate. So if you notice on the settings page, I was able to change how much I wanted to trade on. That's the amount. That's an amount setting that I can choose based off of how much I have in the account.
And on the screen where you pick the level of aggressiveness, that is switching out the back-tested model that you just spoke about before. Is that correct? So like it changes the hyperparameters of that model?
Yeah, so what it's doing is it's just saying, okay, increase the order size. So we have, the way this is executing is actually like every user has their own bots, their own dedicated bots. And so the bots have their own configurations. And so the configurations are set, and which is reading the data and then executing for you. Yeah, every user has their own setup essentially, and so they have their own configuration. So when it's reading the bots are reading the data, they are essentially performing a set of actions on the data received to mimic what settings you have here. So if you've increased aggressiveness, it's just taking the order size relative to the account size and saying, let's increase that size or decrease it, right? Because I can also choose to decrease if I'd like.
The miners on PTN, on Subnet 8, they produce orders, buy or sell Bitcoin, some amount with some leverage. And that information, that trade is not specific to the amount of funds that are being traded. So is that how it can apply to anybody's account? Is that correct? Is that how that connects?
Yeah, that's a great question. So the way that it works is on PTN, you're actually describing the account size. So there's an idea of a percent of portfolio, essentially, that's dedicated to every signal we receive. So when the miner says, I want to take a trade, they say on what size. So we can essentially replicate that via a network model with a weighted model and translate that into their account based off their size that they choose here.
So take me through like the full UML diagram from some amorphous black box miner on PTN to I've linked up my Hyperliquid account with 1 Bitcoin. What are all the stages here that this information is passing through towards my account?
Right. So the way that this works in the full pipeline, and Thomas may want to chime in because I'm sure I'll miss some things here, but the whole pipeline is the miners send in the signals, the network receives it. So instead of typically what you see is on most networks is a validator ping the miners for data or requests. Instead, the miners are sending it to the validators. And then the validators are essentially analyzing the data on a second-by-second basis to ensure proper data, essentially the order information is accurate. Now, so the validators receive the signal from the miner. From there, we've created a pipeline from validator to infrastructure, our infrastructure. And we actually just outputted a new feature to reduce the latency on that tremendously. I think Jordan worked on this, and now we have it at sub-second latency, which is pretty great. Obviously for trading, it's very important. So from the PTN side, we have a server where a validator can set up, which can be consuming data from an output via streaming. So our R&D infrastructure is essentially reading from the validator, consuming the data, and then referencing the network model that's been created, this weighted model, and then saying, okay, say there's an order that came through of 0.1x, right? 10% of portfolio from a miner. So it would take the order, consume it on the R&D side, like our infrastructure side, and then say, okay, reference a network model. Okay, this miner has 10% of it. Okay, so now we're going to fill on 1% of this person's account size based off of the model and the signal received from this miner based off the factors. So now it's at 1%. Now they choose aggressiveness multiplier, say 1x, so it'll execute on 1% of their portfolio, right? Their size of their account, 50K. It would execute on 1% of that, so $500 on a 1x multiplier. Now, if I move this to 2x, it would be executing on $1,000. It'd be acting as if your account allocation times the aggressiveness multiplier is the size of your account. So it's acting as if your account is 100K. So the order sizes are simply increasing or decreasing based off this aggressiveness multiplier that we have set here.
This internal machine learning model, or like the intermediary, this is a model, it's a machine learning model, I suppose, that's been trained to maximize the return of your portfolio given the signals from PTN. Am I correct?
I think actually Paul might want to talk about it and kind of where we're going. I think that would be a good transition. I can go back to the slides too.
Sure. Well, before Paul goes there, I believe I understand the full structure. One last question about just the platform. This is open and available to people today, correct?
Yeah, we're onboarding users right now. We are taking our time because obviously bugs. This is brand new and it's a rather large endeavor. We have very interested parties, people very excited about this, wanting to use it. And we are trying to onboard users as quickly as possible, but at the same time, with any new system, any new platform, there are bugs. So we are in beta. So we are onboarding users appropriately with appropriate size. So just a heads up there, this is being rolled out. And then our goal is essentially start of Q3, allow anyone in certain regions, right? This is an important factor is, we do need to do this all appropriately according to regulations. So those that are eligible will be able to sign up and review strategies. And then every strategy will have a certain amount of assets under management that it's willing to take on, essentially capital. And that amount of capital will increase as we start to develop some new features, which we'll hit on as well in the presentation.
So just a question about the vision here, Arash, and this might be out of turn in terms of a question, but is there another comparable system in the world where you have access to, elite trading data that you can simply just log into an account and get access to? Or like, isn't this kind of data extremely expensive to access in the first place?
Yeah, so me and Jake, we've had this conversation, and my vision. Like when we think about what normal investors, like a typical retail investors had access to, they've had access to scams, very aggressive martingale strategies that blow up. They've never had access to sophisticated strategies, anything that an accredited investor would have, say, in the US. When I say accredited investor, you have to have a certain amount of capital to meet the requirements so you can get access to a hedge fund, which then has to accept you as a client. So what we're building is so different than what a typical or retail investor has ever had access to. And that's the whole vision. That was our mission here, is to build something that actually works for people that they can rely on. And that's why we built it. So they've never had access to something like this, never had proper access to risk-adjusted returns. And so that's the idea. That's what we want to enable for them.
Just playing a bit of devil's advocate. Surely if you have access to extreme alpha through this platform, there will just be like race to the doors by all the available money, and at a certain point those trades become less valuable because they're so popular and easy to access. Like, how does that play out? You see what I'm saying, right? It's like the alpha is taken away just by the fact that the information is public about, like, if everyone makes the same trade, then no one has the edge.
Yeah, so when we talk about like long term, right, like this becoming extremely popular, which is our goal, there's two things. One, we haven't really hit on it yet, but there's this program we want, which is the active validator program. Essentially, this layer of abstraction between the signals generated and what's seen as the orders on Glitch Financial becomes more complex, right? So this layer of abstraction between the signals received by validators and what you see as an order placed will get more complex and more competitive with time, right? So that's one component, is the data, this idea of like a signal loss, right? Which is something that we definitely think about internally. There's two factors to it. One is the complexity of the strategy developed. Second is the rotating door of miners, right? So it would be very hard to reverse engineer. However, let's just say this becomes billions of dollars we're taking on, right? Tens of billions. And it gets more and more complex. The last piece is switching from non-custodial to custodial. So allowing validators, which are going to be part of our program, ourselves, to switch from this non-custodial system to a custodial system where they take on their funds. That's something that we're already thinking about switching to, especially as we go through proper regulations through the SEC, CFTC, things like that, which we are working towards. We are hiring a director of investments directly for that. So that everything can turn to custodial, and then it's kind of like you have access to all these pretty much hedge funds. I mean, that's what this is. It's access to the resources to really see the scale. So that's the idea.
And so what happens when this scales to infinity and everybody in the world is signed up to Glitch Financial and everyone's getting an infinite amount of return? And obviously that's not possible, right? Like, but where does this dream take us, Arash? Like, what do you see at the other side of this chasm?
Yeah, I think right now it's just disrupt, right? Like when we always talk about building on BitTensor, it's about how can we build disruptive systems? And, when we get there, I think it's going to be beautiful. I mean, I don't know. I think, we've been called the heretic of Wall Street already by multiple institutional players. And I think that's wonderful. So when we get there, we'll face it and we'll plan. But that's the goal, is to try to disrupt as much as possible.
Well, I didn't want to disrupt too much of your presentation, so please continue.
Great. Thanks for the questions, Jake. Those were great.
I believe
I'm going to switch back to slides. Give me 1 second.
Paul's gone.
Did he leave again? Oh my God.
Miss you, Paul.
Oh no, I brought up Barbarian accidentally. He shouldn't be on stage.
All right,
Okay.
I think we can go back here. All right, press play. All right, where were we? Okay. Oh, that was the demo. Cool. All right. So we've also been going through beta. We've been learning a lot, and I think one of the things that we've been really trying to concentrate on is what are our major takeaways for improvement. How does the data that we are receiving from PTN align with the data we're seeing from Glitch Financial? So this is the orders received, essentially the price difference, the absolute price filled on PTN, and the actual price filled on Glitch Financial. So the relative threshold here, this is for crypto markets. So the relative threshold here that we've used is 0.1%. That's a typical fill on Binance. And what you can see, this is, so whether it's negative, right, as in you're getting a better fill than what you got on PTN, or it's a positive, like it's a positive fill, meaning like it's a fill that's at a premium. We've mocked it all out and we're tracking this internally. So ideally, as I said, latency improvements are something we've really been concentrating on. Getting to a 1 second, sub-second system for execution of orders, this value will drop as time goes on. So we want to get as close to market, right, between what we see on PTN and what we see on Glitch Financial. And so we're just optimizing and improving systems so that as it works through our pipeline from PTN, streaming of data, R&D infrastructure with Kafka, to our Glitch Financial infrastructure with bots, everything is seamless and takes less time. So you'll see better execution with improved price differences between systems. So this is one of our key metrics that we're really measuring in beta. So again, it's hard to press down a key while you're talking. Just push to talk constantly. So one of the things like we're really measuring is this is a big measurable for us for the success of beta. Less on the performance side, because we know there's bugs, we know there's latencies. It's more about, can we improve on our key metrics to ensure success as we scale. Cool.
Okay.
Thomas, you want to hit on collateral?
I'd love to. So speaking on scale, essentially the way I delineate this, the way I think about subnets, typically I break it down into infrastructure-based subnets and information-based subnets. And as the subnet wants to scale, an infrastructure subnet would handle more infrastructural capacity. So this could be like the number of requests that we see, the number of tokens that are handled, maybe the amount of GPU, whatever the metric is. Information-based subnets are improving the quality and scaling by either increasing the quality of information or potentially increasing the amount of capital, essentially the abundance of information that they're working with. So right now on PTN, each of our miners is trading with simulated account sizes of about $100,000. And that was specifically tuned. We made slippage models $1,000 USD for slippage models. And essentially what that allows us to do is it allows us to get miners in the door, get familiar with our ecosystem. It allows us to attract more talent. But as we want to scale our system, what we want to do is introduce a system of collateral. And essentially what collateral is going to do is going to allow our miners to post alpha on chain, and that will determine the size of their portfolio with a risk to capacity ratio. So essentially we use a drawdown of about 10% on PTN. So you would always be putting down 10% of your capital base in collateral. So if I want to trade with $1 million, I would put down $100,000 of theta equivalent, and I would now be trading with $1 million. So our plan is to change our incentive mechanism to introduce this capacity notion along with smart contracts to enable collateral from our miners. This will allow our miners to actually compete not only for the quality of their signals, but the size of their portfolios, thereby increasing the utility of Subnet 8 overall. So this not only aligns incentive with our miners, this also encourages our miners to focus their efforts on a single unified miner. It also allows us to dynamically scale the utility of our network along with the price of theta. So we're pretty excited about collateral. We're looking to roll this out into the end of Q2, and towards the end of Q2 is going to have a preliminary version for our miners to get familiar with, and then we're going to increase the capacity through the end of Q3 as we introduce larger and larger limits on collateral.
Wait, before you go on.
Sorry, go ahead, Jake.
Yeah, before you go on, sorry, I think that slipped past me a little bit. Who the miners are bringing their own collateral to the network, hosted where? On their miners. They're holding theta on their miner, correct?
We're going to have smart contracts, and the miners will be able to deposit theta as their collateral.
Okay, and then that is being traded, or not? It's just there to prove that they give a shit.
It's there to prove they give a shit, and it's also there to protect downside.
Okay, so they are collateralizing their trades, and so you'll actually trim that collateral if they perform badly, and this actually makes them it allows you to have more trust in the trades they're making. Is that the idea?
Correct. And can I take it a step further?
Mm-hmm.
So we not only want our miners to be posting the collateral, but we also want to build a system where investors can identify talent early in our miners and make investments into the collateral pool for our miners, thereby increasing their capital base and increasing their competitiveness on PTN.
So when the investors stake or bond their theta to a miner, are they doing that speculatively? Like they're trying to pick a miner that they think will perform well, and therefore they'll make a return on their theta?
Can I pick up really quick? So Jake, we introduced this idea of subnets, right?
Mm-hmm.
And which is wonderful. I mean, I think it enables a ton for us. So you can think like per market subnets. So it really enables us to have competition on a per market basis and scale. And then we are thinking about Premier League versus A League versus B League versus C League in terms of miners on each market. So if you don't have a lot of collateral, say you're a new miner, you don't have a lot of money, and you want to be able to prove yourself out, you can compete on a lower tier league with a smaller amount of collateral and prove out your ability to trade on the collateral. Investors can identify that performance on that collateral and choose to fund you by working with you. And so we're essentially creating a marketplace where we are having this intersection between the investors and the miners, and they've shown some performance metrics, and they can essentially level up and go to the next tier to get more rewards.
Interesting. And is this a standard practice in prop shops where traders come to that prop shop and actually bring their own capital? Tell me more about if this structure reflects other things seen in the industry.
Paul, are you there? I don't know if we have Paul.
Can't hear him. Well, it's a good segue, actually. And the one thing that I would like to see, and I'm sure you guys have the data, would just be like, how performant is this network model? How are you guys evaluating just like the raw performance of the network? Aside from individual miners, but like the network itself. You have all of these metrics, Sortino and Sharp, etc. How are we doing?
Thomas, do you want to give an overview of just the model that
Absolutely.
Paul put together, and then also,
Sure.
yeah,
I can speak a bit on the kind of analytics we've been doing, and essentially how we're thinking about it. As a composition, we're looking at somewhere between 20 and 35% annualized, with a Sharpe ratio anywhere between 2 and 3 in back testing. Of course, we're, as Arash mentioned earlier, in our beta period, we're tracking every single trade as it executes on accounts, making sure that it's sizing correctly. Each brokerage has different specifications about how orders are filled in terms of their size and scope. So a lot of it has been infrastructure testing, but essentially that's where our backtested results are. It's backtested, but we're hoping to see something around that ballpark.
When you say it's back tested, like you said, what does that mean? Like it doesn't mean too much if it's a back test, because you're potentially just fitting to the training set, so to speak, and it's not so clear if those are like future returns.
The system we have has had robust measures to avoid this. So Paul has essentially built an optimizer on prior returns to be predictive of future returns, as he was kind of touching on earlier. And essentially every safeguard we could take is baked into that backtester, if you want to speak on that, Paul. But I think it's an important caveat.
Can you guys hear me? Can you hear me?
Yay, we can hear Paul.
Oh, all right, all right. I don't know. I'm having Discord issues. I'm sorry. Yeah. So as Thomas alluded to, we've built a lot of different tools and technologies integrated with the backtester, including an optimizer, several different types of optimizers. We're overlaying different types of alpha models, risk models to be predictive or to explain to build better network models, right? So, and I don't know if I sort of cut to the chase in terms of miners, and over time, we've grown our representation of miners and the quality of the miners. So we're going to think about ways to incorporate in terms of the entire portfolio as well, maybe perhaps directly within the incentive mechanism. But for now, what we're doing is we're taking the miners that we have and using them, optimizing them, developing alpha and risk models on top of them to produce the best quality portfolios to produce for Glitch Financial.
When you guys take these signals to the market, like have you gone all the way to testing with real cash your signals, and how's that performed?
That's a great question. The account that I showed you was real. That was real capital on one of my accounts. I have it connected to a broker with capital. I would say, right now, again, I wouldn't say that in terms of performance, there are bugs. So I don't know if it's going to directly translate right now. And I don't think that's really been our concentration as much as, making sure that things are working as expected. So I would say performance is really the thing that we're going to be concentrating on over the next quarter. Is let's iron out the bugs is step one. Oh, sorry. Let's iron out the bugs is step one. Let's make sure that this thing has the proper latencies so that we can execute properly. And then let's start onboarding like more and more users for scale with a properly working system. So it's been less on the, I think pretty expected that, the system isn't going to work perfectly across a bunch of users to start. And so now it's just a matter of, showcasing results as we head into Q3.
Understood. I'm being very disruptive of the call. I really want to hear more about the model that you've been training, Paul, because it's very interesting. How have you been doing that? Like, what are the techniques that you guys are using to train this network model?
Right. So again, we have a couple of different tools, right? So one tool is simply taking an optimization across historical risk and returns of different miners, right? We've got a lot of miners that are individually creating high returns per unit of risk, but collectively, some are more correlated to others than we would like. So there's no need to weight a whole bunch of highly correlated strategies together. So that's why we want a diversification of miners and miner strategies. So training, part of the training process is including an optimization routine to enable the portfolio to act the way we want. Thank goodness our scoring mechanism and our incentive mechanism is predictive of future returns, and so that's part of it. Within the model that we showcased, though, to answer your question, really used a combination of a couple of factors that in crypto space, typical factors that you would commonly use in order to measure performance or to predict performance, I should say. And everything from momentum and reversion type of signals to Bitcoin betas and residuals versus Bitcoin. We've tested a lot of different types of factors to see to what extent they're predictive of minor returns within the crypto space, and we've employed some of these factors. And we'll use rolling windows of predictiveness to determine we've got a whole set of toys and tools that we have in front of us in order to create the best types of portfolios of miners. But the key is having a diverse set of miners, each having some level of orthogonality across the entire portfolio, and that's the key aspect of what we're searching for. And there are different ways to tackling and solving this problem.
Sorry,
Paul, just really quickly, go ahead, Jake. I
Go
was going
ahead.
to ask a question about you made earlier, and I wanted Paul to kind of answer that one, which was this idea of having collateral. Paul, what do we see from typical prop firms, and just based off your experience and how you think it mimics well onto PTN, is this idea of collateral?
Done. It's commonly done in prop trading space, right? And what's nice about it is that we are then able to engage from a risk management perspective. So as miners develop track records with us, right, with real capital being deployed, we can then perhaps change their capital to collateral ratio, right? So over time, if miner A has a great track record, really perhaps as a risk management from a risk management perspective, control that capital to collateral ratio. When we start off, the idea is to have everyone set at the same capital to collateral ratio, but over time, as performance gets measured, we might adjust those ratios, and that's often done at prop firms, right? You come in, you've got a well-established track record with us. You develop it. Perhaps less capital is needed in order for us to feel confident and deploy the strategy.
So we have we have a physicist on stage. Stefan, what does your physics eye see?
I'm by no means an expert in prop trading, but I guess in my brain, in a decentralized system like BitTensor, everything is open and visible by design, at least what we can sort of take from the miners, their predictions. But when it comes to trading strategies, that could be a problem. How do you stop the other participants from copying or reverse engineering the best strategies? Like, how do you keep the secret sauce secret in a way that keeps this competitive, but also like it can keep pace with the backdrop of, you know, very, very competitive prediction systems that are out there in the market?
Thomas, you want to take this one?
So we've got this idea essentially of validators eventually competing for quality of signal. And I think this is kind of an interesting one that a lot of information-based subnets are going to come to as well. But essentially, we want to provide validators who are providing the most utility to our network with the highest quality of signals, and the rest of them are going to have degradation in some sort. So essentially, this is going to slot into this active validator program that we're going to be rolling out and can go into more detail on. But as validators are looking to compete to build models on top, there's actually going to be a slight priority queue in terms of who gets the quality of data when. So this essentially is going to allow us to have the people who are most productive with the outputs of the system getting the ones primarily before any alpha decay would occur.
Yeah, just a heads up on this program. What it is essentially getting the validators to be active participants in the value proposition of the network. So the validators will, similar to us, be using our infrastructure, which we're going to open source, and they will be able to take the data they receive, and they will be able to build models and deploy them to Glitch Financial as competitors. So when you go to that strategy page, which I showed earlier, you'll be able to scroll and see all the validators, pick and choose, review historical performance data, review how much assets under management they're willing to take on for their strategies, and essentially choose to follow or work with a validator on with their strategy. So every validator via this program, which is optional, right, for validators to choose to join, will be able to be able to execute on the data and essentially fight for delegation from the theta holders. So essentially a race for delegation and access to the network. So access is limited based off the size of the validator. That's a feature that we're adding. So as access is limited, the top validators based on delegation are fighting to get the most access to the best miners with the most capacity. And that then reflects on Glitch Financial with the best strategies that they're deploying. So the way this program works is we are using our SN ownership emissions to essentially drive this forward. We are going to pay validators to execute and build strategies and deploy them on Glitch Financial to showcase, to essentially create competition. Look, validators are always the end pipeline of the valuable commodity produced, and we want them to compete with that end pipeline data, that commodity. So that's the idea behind the active validator program is let's get them involved, let's get them to compete. And we already have entrants that are very interested. We've met with multiple quant teams. SN88 is one of them. So really excited to have them join and compete with Trusted Stake as one of the entities. So we're getting a lot of interest in this program. And we're going to have this program available for anyone that wants to come compete as a validator and take the output and build strategies for. So we're not going to be competing in this program. Obviously, we are going to be kind of the benchmark with our strategies, and then validators will compete against that benchmark for rewards.
Very cool. The idea of getting the validators involved, I'm fond of. There's a part of me that would be very satisfied to watch the validators be put to such hard work. I think another question, which is a little bit of a different topic, but I know since DTAO, there's been a precedent of some subnets choosing to burn miner emissions in order to, let's just say, stabilize, sustain the quality of their subnets predictions and keep them really competitive. I know that you guys are toying with similar ideas. I'd love to hear a little bit more about your current thinking on the importance of alpha emission control in your subnet for various participants to ensure that the subnet works as well as possible, I guess.
Yeah, definitely. We talk about this idea of collateral capacity and rewards. So we talk about essentially how much you're willing to put down to get a certain amount of capacity, and that translates to a certain amount of rewards, and it has to be proportional. So the three have to fall in line for the system to work. So when we talk about burn, it's essentially saying, what is the amount of capacity on the network? And as that scales, this idea of burn would reduce on miners, which we fully expect to be the case by Q4. So essentially, miners will be taking on more capacity to fill out the amount of emissions that are given out on the network as they compete, and through that, emission burden would drop. But it's essentially to make sure those three are always in line. The cost to compete, the capacity taken on, and the rewards distributed. So this is very typical of, and Paul can talk about this from a prop firm perspective, but this is I think this makes a lot of sense. So yeah, that's the idea behind burn. And then we are there with our miners. Whatever their burn is, our burn is. So we will burn accordingly on our end from our SN ownership emissions. So we don't see ourselves separate from our community.
Right, and I know that it's a prickly topic, but so you guys had a town hall, if I'm not mistaken, either late last week or early this week, to sort of bring this to your community and discuss what that looks like for everyone involved. Did you guys make a concrete decision at that point, or is something you're still deliberating internally?
At this point, I think we've heard from a lot of the core miners that voiced. They were all at the town hall. So I think at this point we'll be looking to move forward. And again, whatever their burn is, which is going to be relative to the overall emissions of the network, the subnet, and whatever happens to them will happen to us. So I think that's pretty well. That was discussed at the town hall, and I think we've come to that conclusion together.
Thank you. I know they were slightly curveball questions, guys. The audience would have hung me out to dry if I didn't ask a couple.
No, it's good. They're good questions.
Got a quick question if somebody's got some time.
Yeah.
Awesome. So this is kind of unrelated to your technical work that you've been doing, but I'm a little more curious on the outside, sort of 1,000-foot view sort of thing. Now, you guys are doing trading across like a lot of regulated markets. Have you guys evaluated your exposure to the regulatory bodies like SEC, CFTC, ESMA? Because
yeah, absolutely, great question. Yeah, we're very cognizant of that.
Those sorts of, yeah, like eToro, KuCoin, I think OKX. Yep. Everybody kind of got screwed by this.
Yeah, definitely. So we don't allow U.S. persons. There are restricted countries for user base for Glitch Financial. So we're doing everything the right way. So like from a regulation perspective, no U.S. customer base to Glitch Financial. We are very particular in our terms as to who can use the product, from which regions. We execute VPN, or like we execute on restricted. From a geography perspective, if you're trying to access from a certain IP, you can't access Glitch Financial. So it's not, we try to restrict as much as possible and follow regulations. And part of that is bringing on the right people internally to get us in the US. So that's currently what we're working on is bringing on someone that can guide us through regulations to enable those countries that, we can't onboard people from right now. So that'll happen this year. So we'll have, we're currently becoming an RIA, working with the SEC and CFTC with the regulating bodies essentially to allow more users, those users from the US, access to Glitch Financial, and then essentially we'll do the same for all restricted countries. Just continue to onboard more and more. So right now, again, very early stages with Glitch Financial in its infancy, right? And we need to take the right steps, and we are taking the right steps to make sure we do this right.
Sounds good. If you guys need any help with that, let me know.
Thank you.
So Arash, are we? We're exactly there. You go. Perfect timing. It was the last slide. I predicted it. I'm sure there are a whole bunch of questions from the audience. I'll let you answer the ones that you want from the channel. People are free to type in, and Arash, you can take them. Does that sound good?
Yeah, let me just turn off my screen share. All right, cool. Yeah, now I can go look. Let me go take a look. I'll pop it up. All right, let's do it.
So I think the one that I would like to know would be from T-Slice. What's the mechanism to put new value into the alpha pool from operations?
I'm sorry, ask that question again, Jake. Sorry, I didn't follow that. I'm trying to read the comments.
There's a lot of comments. But the one that I would echo here is, what's the mechanism to put new value in the alpha pool from operations?
Right. Okay. Yeah. So the main one that is there is going to be from Glitch Financial. So look, we built this whole thing. Everything we do is to drive value to BitTensor. And so our plan is all of the strategies we're launching that are all built from PTN are, everything the validators are doing, everything we potentially charge validators for launching strategies, all the user base will funnel to our alpha token. So our goal is to provide as much value as possible to our token, or to the alpha token.
From Striker, without limit orders, you're going to have to explain what that is, by the way, to the audience. How will you offer institutional strategies with your copy trading setup? It's not possible from an architectural standpoint. It's not so much of a question as a statement, but
yeah, I appreciate it though. No, I've talked to Striker about this. No, we are thinking about limit orders. It's actually something he brought up, and I immediately went internally, and we've talked about it. Thomas has talked about that. He's wanted limit orders for, I don't even know, 6 months. So it's something that we definitely want. We have a roadmap of features. It's just kind of like, at what point do we need this to really scale, right? And so it's always, as developers, as creators, it's always like, what is the most urgent thing that we need this moment, and what are the things that we need as we build out to really scale this, right? And so it is definitely something we're thinking about. So I did appreciate that Striker brought that up. Yeah, we are definitely, and it's not like it's not a problem for us to implement. We can definitely implement that as a feature, which again we're thinking about.
Okay, this one's probably for Paul. It's from Crunch about avoiding overfitting, which is definitely a problem with backfitting. Back testing. Am I right there, Paul? Is Paul still on the stage?
Yeah. Can you guys hear me? Yeah. Yeah. Look, backtesting is a tool, right? It's just one of several tools, and we don't typically want to backtest over and over again because yes, the risk is overfitting a backtest, right? So that's a point well taken. Just like with all model development, there are tools that one can employ to ensure that you're not overfitting or underfitting, and so typically what we like to do when we develop models is to first develop the model and then just backtest once using the model, and to get some out of sample data as well. to backtest not only in sample but out of sample as well.
Thomas, I believe you asked. Oh, you've been answering questions in the chat here, Thomas. Why don't you just answer that question directly into the.
Yeah, this was kind of a
The mic here.
recap on one of the ideas that we were talking about earlier. Essentially, having our validators, based on their participation, be eligible for different quality of strategies. And we're also potentially exploring some ideas around ZK, which could be pretty interesting, and actually maintaining the integrity of data prior to its release. But less development there.
ZK and also time lock, by the way, would be valuable. However, if you time lock trades, they become difficult to use for strategies because they are therefore necessarily delayed. But you're familiar with time locking, correct, Thomas? That's how we do commit reveal on the chain.
Yeah, but I don't think we haven't worked with it.
It could be very powerful for forcing miners to prove that they have the results. So basically, you have the miners encrypt data that can only be unencrypted in a certain amount of time, and this makes it very difficult to do with things like relay, as might be a problem on the subnet. And on that note, have you seen relay attacks be an issue on subnet 8 at any point?
Yeah, I mean, man, it's a subnet. It's like, I mean, we've been around for a while now, right? And so, like, essentially, the attacks, they're always evolving, but they're essentially assumed to be guaranteed. Before, we had folks that were running martingales. Of course, we developed a martingale detector and have implemented that. So, since we've done that, we haven't seen people attempting martingales, essentially, because they're penalized into oblivion. But there's a very tricky balance essentially between information over time and essentially the cost of both participation and rewards. So there's a lot of nuance that we need to control as subnet owners to essentially maintain balance on the network.
I think there was a question on the strategies that we actually take in, and one of the things that we don't do is we don't take in high frequency trading. So I think that was a question that was, or a thought that was brought up, and it's not something that's possible. I mean, you would lose so much value in trying to execute in high frequency trading. So that's kind of not our goal.
There's a question in the audience from Max from Subnet 44 regarding how you can reconcile high frequency trading and the sort of inherent latency of subnets. I'm not sure if we've covered something on that topic already. Yeah.
Oh, that's what I just said. Yeah, Stefan, was we don't handle high frequency trading. That's not our goal as a subnet. It wouldn't translate well, generally speaking, with latencies.
Right.
More questions from the chat, please. Can we hear some example trade strategies and how they have produced good risk-adjusted returns? Yeah, just some examples here from the network, Taoshi. Some wins that you guys have seen. Be curious.
Yeah, I mean, I can talk about just the model I've put together. There's been pretty much a ratio of returns from 2% returns to 1% drawdown in the last 45 days for the expected model. Again, we've had bugs in production, but that's kind of the ratio that we've seen live. So that was my expectation going into beta based off what I had seen live and some testing. And so it just kind of carried over. So I think we had, I think roughly one for on low leverage was, I think, 2-to-1 ratio. But again, you can always up aggressiveness. So
Strikers in the chat.
yeah, and Yeah, I'm taking a look. Yeah, I think there's some questions around. Yeah, so with validators, with this validator program, the whole idea is it's unlikely that we built this request network, and the goal with the request network was to just give people the ability to view the data. But over time, with this idea of an active validator program, the data will be more privatized as the validators want to use the data to commit to the active validator program. So we imagine the top validators are essentially all competing for access and are less likely to share that data. So, and especially with some of the things we're thinking about in terms of limiting access based off the delegation size of the validator, to get access to better miners would require more delegation.
People are asking for the stage to expand, but we don't have to go there unless you guys want to. Arash, how are you feeling?
I just answered his questions, so I hope I did. I answered at least 2/3, and obviously, we're always looking to improve our systems. So I think, things that we talked about that we're working on, collateral orthogonality improvements. We have plagiarism detection built in, so like miner relaying was quite hard to perform, but orthogonality is something we definitely are adding, which is pretty standard. Paul can talk about this at Proforms, so that's something we're adding. So even if you have similar strategy, like essentially not directly, miner relaying, which we already solved for with plagiarism detection, but more if your strategies are overlapping on the pairs. And so that's something that we are solving for as well. So yeah, I think in terms of evaluation and scoring, I think, we're always trying to improve our methods there. And then in terms of, I think data leakage was one thing that Barbarian brought up, and being able to buy that data, again, I don't think that that's a really long-term problem. We actually want people to use the data. That's why we created the request network and wanted people to get access.
Arash, when will we see PTN trading subnet tokens?
That would be really fascinating. I think we have some trading subnets for alpha tokens. It'd be cool to incorporate them. That would be fascinating. Following strategies like that and incorporating them. I have to look into it.
Well, Arash, it's been a pleasure to have you up on stage, and let's not forget the high level here about democratizing access to anybody that wants to have these types of strategies at the fingertips. I'm really excited for the beta. I definitely want to participate, and I think this is really going to be the ultimate test. Is can you guys onboard users, and can you showcase really real returns in the wild from these strategies to a variety of different types of people? So that's super exciting. And it was a pleasure to have you up here, Arash, Thomas, Paul. We had some technical difficulties, but that's just the meme of the novelty search these days.
Yeah, thanks for having us, Jake.
Thank you.
Good to be here. Thank you.
And my co-host Stefan, thank you so much, and Chib, what a pleasure. All right, have a good night, everyone.
Always. Later, guys.